DVS is seeking investors to fund the market entry of our HealthPort telehealth platform for bringing vision care and other specialty medical services to primary care clinics. DVS assembled our HealthPort prototype and showcased our system to potential customers in the optical industry. The HealthPort is the first telehealth platform for vision care, which allows eye exams to be conducted remotely through the internet without the need for an on-site eye doctor. Our high-resolution refraction system creates a new category of ultra-high-definition premium-price corrective lenses that we will derive royalties on, and we created an optical preview feature to upsell customers to premium-price lens products in the sale of second and third pair. The problems we were addressing in the optical industry were caused by the century-old phoropter, which was error-prone and couldn't provide measurement resolution modern digital lens fabrication technology can now provide. The need for a $150,000 on-site doctor to manually spin the dials of the phoropter limited access to vision care and drove cost, and the whole vision test was a lousy consumer experience. DVS compiled a number of firm and potential customers, including NVI, the fourth largest optical retailer, and Hoya and VSP, the second and third largest manufacturer of spectacle lenses. Following successful pilot trials, these customers represented the opportunity for DVS to place over 10,000 units into the North American market. While these customers loved the features of the prototype, they wanted a production-quality device delivered to their stores and ECP customers for pilot testing. We partnered with Plexus, a gold-standard Wisconsin-based contract engineering and manufacturing firm, and created a plan to design and build units for our customers, first at GCMI and then transferring manufacturing to Plexus's Neenah, Wisconsin facility. We determined that a total of about $6 million was needed for this effort. With our customer orders and plan with Plexus in hand, we set out to raise $6 million in equity from strategics, VCs, or private equity investors. We attended the Southeastern Medical Device Manufacturing meeting in Nashville in May, competing against 15 other companies that pitched to 22 VCs and other investors in the medical device industry. DVS won the SIMDA competition and was voted best company with the most attractive deal. But we found virtually no investment capital for pre-revenue medical device deals in the Southeast. Since the ACA was passed with its medical device tax, the number of deals had fallen by nearly half, and the investments that were being made were only in later stage businesses. We then explored alternative strategies for commercial entry that required less capital to be raised and that permitted an earlier entry to market and less time to revenue. We also looked for opportunities to deploy our existing prototype and to assemble and place other pre-production units to demonstrate the HealthPort business model before raising significant capital needed to re-engineer the HealthPort for mass production. We found that there was a major unmet need to teleport vision care and other specialty medical services to the primary care campus. Nowhere is the problem of delivering specialty medical care to primary care patients more acutely experienced than in federally qualified health centers, or FQHCs. FQHCs are typically community health centers that provide outpatient primary care services to underserved patients. FQHCs are certified by the Department of Health and Human Services and receive grant money to care for patients with no insurance. FQHCs have grown tremendously under healthcare reform, where they serve as medical homes to the newly insured. There are now over 9,000 clinics caring for nearly 25 million Americans in all 50 states. In Georgia, 27 FQHC operators provide health care for over 400,000 patients through nearly 100 clinics. A typical FQHC is the Oakhurst Medical Center in Stone Mountain, one of Atlanta's leading community health centers and the 7th largest FQHC in Georgia. OMC provides care to 20,000 patients through 45,000 annual encounters, where they provide primary health care services in their main 24,000 square foot clinic. These services include family practice and internal medicine, OBGYN, and pediatrics. A large portion of OMC's patients have multiple chronic conditions, such as diabetes, heart disease, hypertension, obesity, and arthritis, that require care from the primary care doctors at OMC and from off-site medical specialists. Each year, 60% of OMC's patients require off-site visits, including 4,000 imaging studies and 7,500 off-site visits to medical specialists. The most commonly needed medical specialty service needed by OMC patients is for eye care, accounting for over 23% of all off-site referrals. OMC also cares for 5,000 school-age children who are now eligible for annual vision exams. Today, an OMC primary care patient with multiple chronic conditions must shuttle between her PCP at OMC and multiple off-site medical specialists. Having to travel to numerous specialty providers is a hardship and costly for patients. It impairs the coordination of care and incurs redundant costs of the facility and staff of multiple medical specialists. We envision deploying our HealthPort telehealth system on the OMC campus and provide eye exams to OMC patients from remotely located optometrists and ophthalmologists. By partnering with medical imaging companies and other healthcare providers, we could expand the number of medical specialty services delivered through the HealthPort platform. In this fashion, the HealthPort can deliver vision care in a customizable and expandable array of other specialty medical services to the primary care campus. As shown in this table, medical imaging and other diagnostic technologies provides actionable information to medical specialists to provide their care to the primary care patient through telehealth. DVS and OMC entered into a term sheet for a one-year pilot trial of the HealthPort, which will be located on OMC's campus to provide specialty medical services. For the trial, we have partnered with GE Healthcare, the ENT Institute, the Piedmont Radiology Group, and two IT software vendors, Athena Health and Ramsoft. Through the HealthPort, we will deliver vision and medical eye care, optical retail services, women's medical imaging studies including mammograms and DEXA scans, and ultrasound. We will also provide ENT and allergy teleconsultations and provide other specialty services as needed by OMC's PCPs and their patients during the trial. The HealthPort will function as a specialty clinic operating within a primary care clinic, as shown by this next series of slides. Here we have diagrammed OMC's clinic with waiting room, front office, and exam rooms where the PCPs see patients. Today, these PCPs send patients off campus to receive specialty medical care and consultations. When the HealthPort becomes operational, the PCPs will simply send patients who need a medical specialty service over to the HealthPort to be worked in on the same day as their PCP encounter. A second major source of HealthPort patients will be to identify OMC patients who need HealthPort services in advance. We will query the OMC database to identify patients in need of preventative HealthPort services by searching on ICD-10 codes. In this way, we will identify diabetic patients who need eye exams, at-risk women for mammograms, and bone density tests for patients at risk for osteoporosis. We can identify these patients in advance and then schedule a HealthPort exam on the same day as their PCP visit. Finally, OMC patients will be able to electively schedule HealthPort services. We will collaborate with OMC to make patients aware of the availability of HealthPort services through TV programs in the waiting room and point-of-service materials. Because we are using the same cloud-based EMR platform as OMC, their staff will be able to schedule appointments in the HealthPort, and we can pass consultant reports to their PCPs in a seamless fashion. The HealthPort will maintain a group of medical specialists on call for a half-day or full day of coverage. Once the patient workup is complete, they will be notified by email or text message. They will log into our system for a live two-way consultation with the patient in our exam chair. We then complete the medical record, generate a CPT code, and bill the payer, or in the case of elective services such as eyeglasses, collect directly from the patient. We created a forecast of the annual revenues generated by a HealthPort deployed in an FQHC clinic with 45,000 annual patient encounters. We based the forecast on historical specialty referrals and medical imaging studies by the OMC Medical Center, an analysis of the demographics of OMC patients, input from OMC management, and specialty referral rates published by the National Association for Ambulatory Care. We use this information to forecast the number of HealthPort encounters for optical retail services, medical eye care, medical imaging and diagnostic studies, and teleconsultations with medical specialists. We assume that vision exams and 2 pairs of eyeglasses will be purchased for $104, a typical average selling price for discount optical retailers. For healthcare services reimbursed by insurers, we base the reimbursement level for these services on the lowest published CPT reimbursements by the Georgia Medicaid program. We expect that a HealthPort deployed in an FQHC like OMC will provide a broad and diverse base of services and generate about $1.8 million in annual recurring revenue. The expenses required to deliver the services are listed here, including staff and professional services through teleconsultation. DVS expects that the HealthPort teleconsultation platform will cost $45,000 to build, and that this cost and the cost of medical imaging equipment will be amortized through a capital equipment lease. Other expenses include health IT and billing services, a HealthPort manager and optometrist, marketing cost, and allowance for bad debt. We expect that a single HealthPort will contribute about $400,000 in annual profit, a contribution margin that will increase when 5 units become operational to serve a local area, because a single manager and optometrist will be able to supervise a 5-unit pod of HealthPorts via telehealth. After meeting with the management of several leading FQHCs and the Georgia Association of Primary Healthcare, which represents all FQHCs in the state, we believe that these health centers are the ideal initial channel for deploying the HealthPort in providing a major unmet need to deliver vision care and other specialty medical services to the primary care patients on their campuses. DVS is proposing to raise funds to open HealthPorts in the 10 largest FQHCs in Georgia, with the first 5-unit pod located in North Georgia, centered in and around the Atlanta metro area. We then plan to open the next 5 units in Central and South Georgia, giving us 2 fully operational pods. Here's what the operational plan looks like to achieve that rollout. We can open the OMC HealthPort and a second HealthPort by raising as little as $750,000 in convertible promissory notes that will be described shortly. We plan to open OMC about 4 months after closing, and then take a few months for a shakedown cruise and to ensure telehealth operations are working smoothly, at which point we will move the manager and the optometrist off-site. Then, beginning in month 7, we will finish and deploy our next 4 HealthPort units and deploy them into FQHCs in the North Georgia market, finishing out the first operational pod by January of next year. We will then start deploying HealthPorts to FQHCs in Central and South Georgia, which will give us a good story and operating history to raise $8 to $10 million in an institutional round. These funds will be used to engineer the HealthPort for high-volume manufacturing and to scale the HealthPort business model to FQHCs in other states and to explore other channels to deploy our technology. The telehealth platform for vision care will remain an appealing offering to the optical industry, and in addition to the FQHC channel, the expanded functionality HealthPort has many potential applications for primary healthcare providers and for integrated healthcare delivery systems. This model shows us deploying about 130 HealthPorts over 4 years, and then seeking a strategic or financial acquirer of the business after this period of time. 130 operating HealthPorts will generate $182 million in revenue and a projected EBITDA of $32.4 million. We intend to fund the market entry of the HealthPort with a round of convertible promissory notes that are summarized here. These are the same terms as all prior investments in DVS. The notes will convert into preferred stock with a minimum future equity investment of $3 million or more. The notes carry an annual interest rate of 7.5% and mature in 3 years. The investors are issued $1 warrants in proportion to the amount of the note, and the notes give the investor the option but not the obligation to participate in future Series A financing. These slides summarize the value proposition that the DVS investment opportunity brings to the market. For the healthcare industry, DVS has developed a novel clinic-in-a-clinic telehealth model that is based upon the company's proprietary technology platform. The HealthPort will increase access, reduce cost, and enhance the quality of healthcare, and address a major unmet need to integrate the delivery of primary and specialty care. The HealthPort model can thrive under any conceivable revision of the Affordable Health Care Act because it offers the most efficient and cost-effective means to deliver specialty health care to primary care patients. The flexible architecture of the HealthPort will allow services to be tailored to the needs of the primary care provider and to add new services and revenues to the platform over time. For investors, DVS has dramatically reduced the capital needed for market entry from $6 million to less than $1 million, while simultaneously increasing the recurring revenue per deployed unit by more than tenfold. We have also significantly reduced time to revenue and profitability by deploying our existing prototype into clinical service and by partnering with others to expand the scope of services offered through the HealthPort. All of these efforts will significantly increase the enterprise exit value for DVS investors, as the business will appeal to a broader range of acquirers in the healthcare industry over a time range of 4 years or less. While DVS investors will have the option to participate in future financing opportunities for the company,